and we are live. It's 10:30 a.m. on the West Coast, 1:30 p.m. East Coast, 5:30 p.m. UTC. How are you, fellas?
I'm pretty good. I'm a little bit confused and kerfuffled. Other than that, things are great.
What's new there?
Not much. But coming into this podcast was not the most seamless experience for me.
Got a new Howard Marks letter. We've got Dan Loeb going public with Disney, getting an immediate response.
Toe to toe.
Yeah. Lots of folks in.
Yep.
Where you from?
Where are they from, Toby?
Get Toby happy,
Just-
everybody.
I love it.
Just do like the first 40 of them.
PNG, Oslo, India. Put them in, fellas. Let me know. New Hampshire. Melbourne, yeah. Apopka, Florida. Maryland, Dubai. There we go.
Nah, bro, I'm
all
not
over
in
the place.
Apopka.
Edmonton.
I don't even know where Apopka is.
I love it. Butler, Finland, Estonia. Yeah.
Oh, it looks like it's on the... Where is it?
My wife's part Estonian, so good to
Oh, yeah?
see some of her folk calling in.
Oh, Apopka's like... I guess it looks like it's like Orlando-ish.
It's coming.
Well,
from
shout out
inside the
to you
house.
for tuning in.
Ian
Let's
Castle
get into
from
this thing.
Amish country, Delaware.
Shout out to Ian. He's everywhere.
VSG2, good to see you. Martin Titus, all right. Who wants to do the intro?
I'll do it.
It's
Welcome
Bill's
to
turn.
Value After Hours. My name's Bill Brewster. I'm here with my esteemed colleagues and co-hosts, Jake Taylor and Toby Carlisle. Jake, what you going to be talking about today?
I have a little segment on we're going to call sushi roll economics.
Nice. Okay.
Yeah, we'll see.
Toby?
Might be bad.
Yeah, I got a few things I want to talk about. First, Dan Loeb sent a letter to Disney. I think, and then Disney sort of immediately responded, and somebody, not me, coined the phrase Mickey Mouse activism, which I think is a great expression for it. I might have been a little bit cynical yesterday when I tweeted it out. I've gone back and thought about it a little bit more. I think this is the way activism should be done. And I also want to talk about value because I think I was going through my portfolio, and I just occurred to me, like I do little valuations on these things all the time. For the first time, it's clear to me that value can outperform from here without any multiple re-rating. So I think you get the multiple re-rating if it starts outperforming. And I think it sort of has been under the covers, like been outperforming for about 3 months now. But let's talk about that.
The man is making a call, folks. Well, his whole career is actually a call.
There you go. I'm all in.
And I'm actually going to follow on a little bit of your Disney discussion, and I'll probably loop it into Comcast and what I'm thinking about. So, Jake, you want to start off, and then Toby and I'll piggyback each other
Each of
for the rest of
veggies
it?
first.
All right, let's get it out of the way. So this segment is inspired by a podcast that I listened to this weekend that came out recently that was talking about government intervention and stimulus and how, we fixed a lot of the aggregate demand problem. And it was, I found it to be a very kind of traditional Keynesian viewpoint. Now, I don't know. I mean, where these things almost get to religious proportions because it's very unscientific because we don't have any there's no control group ever, right? We're just,
Right.
we're always.
You're meddling in
doing
the
the same thing
experiment
right now.
all the time.
That's right. So anyway, take it for what it's worth. But as a rebuttal to that podcast, which I'm not going to name specifically, is this really great little October 2008 paper from this guy, Professor Robert Murphy, who he's in the Austrian school. He's a pretty funny writer, and he has like a really good sense of humor. And coincidentally, I've hung out with him a few times. He's pretty good at karaoke.
Big
moving
man.
on. Yeah.
PMOC right there. Coincidentally, I've hung out with him.
So the name of this article that he wrote is called "The Importance of Capital Theory." And he, in that article, was rebutting Paul Krugman, basically. But I'm going to try to walk through what Murphy lays out here and for us to maybe think about it. And I'm probably going to do And you're probably better off just reading the article than what I'm going to do butchering it, but here we go anyway. All right, so imagine that there's this hypothetical island economy, and there's 100 people that live on this island, and the only consumption good that's available is our sushi rolls. And so every day there's 25 people who they get into their rowboats and they go out and they catch fish with nets. And 25 people are out there gathering rice. And then there's another 25 people who take the fish and the rice and assemble it together. And then the last 25, they do the
They work for
upkeep
the
of
Fed.
boats. Yeah, right. That's right. They're a PhD economists. They keep the boats and the nets up so that that they can keep catching fish. Okay, so in a nice equilibrium, this island economy will produce 500 sushi rolls, which is 5 sushi rolls for each person. Okay, one day then, Paul Krugman washes up on the beach, and he starts advising them about how he can boost aggregate demand for sushi rolls, like everyone can have more consumption. And he shows them his outboard motor that he used to get there, right? So we have a new technological advancement. All right, cool. So now he's advised them, and they're following his advice. And now there are 30 islanders who are out in the boats catching fish, including one of them with this motorboat. We have 30 now who are gathering rice, and there are 30 making rolls. And that leaves then we have 5 people divided out to go look for the materials to keep like oil and gas to keep this engine running. So we had to kind of reallocate some of the people. And we have 5 left now to maintain the boats and the nets. Okay. So as we're going along, like Krugman looks like a genius, right? Because now all of a sudden we're producing over 600 rolls, and that's 6 each, including feeding Krugman as the new king. And
Fed chair.
everything is great because now we have 6 rolls each instead of 5, right? We're all wealthier. We've boosted aggregate demand. It's all good. Now, a lot of people would say like, oh, this is probably due to the motor that we've introduced, like this new technology. But really, it's mostly about the reassignment of tasks and getting people working on. We have 30 people who are now going fishing instead of 25, right? So eventually, though, as this goes on, there's a reduction in the boat and net maintenance, and that starts to catch up with you because now there's holes in the nets. The boats are, maybe someone's got to be bailing half the time because they're getting holes in them, and they're getting less fish out of the sea now. So what ends up happening is now we have an imbalance of rice. We have the same 30 people who were doing rice before, and what they do is they start cheating and putting smaller amounts of fish into each sushi roll, right? And eventually the boats break down to where now we are only running some of the boats, and now we have a lot less sushi. So what's going to end up having to happen is that they're going to have a period of deprivation where we get more people working on fixing the boats and the nets so that we can get this thing stood back up and everyone eating again, right? So what ended up happening there was it looked like we were wealthy, like we had 6 sushi rolls each instead of 5, but what we were doing was consuming capital. We were consuming our fixed goods of our boats and our nets and not keeping them up. So that initial prosperity was really illusory. It wasn't real prosperity. Now, and obviously, like during the transition, as we try to get things back up and running again, there's going to be a bunch of islanders who don't have anything to do, right? Because we already have enough people making rice or gathering the rice. We already have enough people producing the sushi. Now we have guys just standing around, and obviously that's how we can end up in a situation where everyone is starving and we have unemployment, right? We have a mismatch between the coordination of resources. So I'm going to read this really nice little passage that Murphy wrote on this that kind of sums it up. In modern economies, workers use capital goods to augment their labor as they transform nature's gifts into consumption goods. Because of the time structure of production, it is possible to temporarily boost everyone's consumption, but only at the expense of maintaining the capital goods, the boats and the nets, which are thus consumed. At some point, engineering reality sets in, and no stimulus policies can prevent a sharp drop in consumption. Okay, so the conventional wisdom right now is that we are stimulating the economy through all of these different programs, whether it's the Fed or direct stimulus from fiscal stimulus from the government. Well, is this actually that we're creating this consumption that we're all going to enjoy, or are we really consuming capital that we're going to have to end up paying for later? Murphy makes the point, like, because he's writing this in October of 2008 when the housing crisis is like, we're in the teeth of it, right? And I don't know, I remember very specifically that time period when TARP was announced, and it was $700 billion.
That felt like a lot of money.
It was like, that was so much money. It was like an unconscionable amount of money at the time. And I mean, you had people who were much more up in arms about that. I don't know if you remember, but they were like, you had economists, you had business people saying like, what are you doing, right? And now that's such a quaint number.
Yeah.
I mean, I find it fascinating.
We count in trillions now.
I know. And
plural.
For how much longer are we going to use trillions? So he's talking about how in Americans in 2006, they consumed a massive amount of consumption goods that were imported because during that housing boom, because they erroneously thought that the rising home values would more than make up for that, right? But then it turns out that was kind of illusionary, and they ended up basically over consuming and consuming really the capital of their houses without realizing it. So when I think about all this stuff, and you think interest rates exist to coordinate the time of consumption now versus consumption later. So do we invest more to create the production for more of us to have more things later, or do we want to consume it now? And the interest rate is what tells us, like, that's the price of time. And so we have a lot of meddling with interest rates around the world, and so to declare it, I guess my big takeaway from all this is that to declare it a victory now is, I think, horribly short-sighted, and we have to see all of the effects of this before we can say whether fiscal and monetary stimulus is really a good thing, and that, like, we have these new tools that are amazing that plug all the holes and are gonna help us. So long, pedantic, but maybe brought a little bit of real world feeling to it by this island, this sushi economy.
Can I just play devil's advocate? So why does the arrival of the motorboat or the engine, why does that then require us to allocate more people to fishing?
It didn't. It was Krugman's advice to get more people consuming now, to get more,
because that boosts
aggregate demand.
Boosted. So that to get more people consuming. So you start with the consumption. You start with, like, everybody's go and eat 6 sushi rolls. Now we need more. Now we've got a deficit of 100 sushi rolls.
Well, we need to get more people making more sushi rolls. We need to
boost the
consume
sushi
more.
rolls. Okay, so it's at equilibrium at 500. We allocate more resources to fishing because that's the bottleneck in the sushi roll production, and now we've got more. Now we can eat more sushi rolls, but we do it at the expense of the equipment. So what's the direct analogy? Like that's the analogy. What does it mean in the context of our economy?
Well, I can't help but wonder if we don't underinvest in some things, and this isn't the only reason. Like, a lot of it is, I think, the short-termism of a lot of the way that management tenures are structured. What is the average CEO is like under 5 years? That's the turnover to S&P 500. I don't care about the boats and the nets if I know I'm out the door in 4 years with a big option package and the golden parachute, right? Like, I will need to boost those numbers today. I need to have everyone eating lots of sushi rolls today. Don't worry about the nets, right? So I think it's pervasive, and a lot of it might even be fighting human instinct to consume more now. But I think interest rates being squished down like they are only encourages more of this behavior. You can borrow more now. You can you think that you're going to have a really easy time to be able to borrow in the future as well, right? Like, so there's not that liquidity concern. Like the markets are always going to be open with fresh money for you, so you can just keep kicking the can down the road.
I think about it in terms a little bit like, so you think about Tobin's Q. What Tobin's Q is the market value of assets versus the replacement value of assets. So the market value of the assets that are in Tesla is massive. So you get a massive multiple if you can come out with some sort of truck or car that runs on a battery. So Trevor Milton says, well, that's what I'm going to do. I'm going to invest like essentially nothing, and I'm going to say this thing is going to be doing that thing, and then look at the massive multiple that it actually got in the market. So he really did like demonstrate that in real time, that. And we don't know if that's a valuable thing that he's created or not, but I suspect that there are other truck companies out there that are going to be able to do something similar if it turns out that it is. So we're misallocating resources by putting it into those things which the market seems to be valuing extremely highly.
Yeah, and in that kind of buy it versus build it calculus, it's even easier to just promise to build it. Right? What you would never buy it, and you don't even actually have to build it. You just have to.
I've got this killer deck. I've got this killer PDF of what I'm going to do, and that's worth $30 billion.
Well, you got that HTML5 supercomputer.
Oh yeah, I forgot that.
So
that's how I made the deck.
Jesus. All right, enough veggies. Let's get something more fun here.
All right, let's talk a little bit about Disney. Dan Loeb, fearsome activist, used to write the nasty letters, has, as we've discussed previously, has sort of taken a vow of not chastity, not poverty, vow of he's not gonna be saying nasty things to management teams anymore. So he wrote this note to Disney. I actually think the rationale is pretty good. He said, you're spending $3 billion a year on the dividend. Cut the dividend and reinvest it into streaming. Like that's a lot of money if you stick it into streaming, because at the moment in the market, there's, even putting aside the short-term stuff that everybody's quarantined and watching a lot of TV, like clearly the world is going to go in that direction, and Netflix has got an enormous multiple on it. Disney get that multiple by reinvesting in the streaming infrastructure and then he just, and like I concur with the strategy. I think it's a good strategy. I just wanted to get this little addendum that he put onto it. And this is kind of what I tweeted something out yesterday. I was a little bit cynical. I'm going to take it back a little bit because he added this in. By providing you with this was a footnote, by the way. By providing you with our analysis, we do not intend to participate or intrude in the basic business decisions of the company. We do, however, believe it is an important aspect of our free enterprise system for management and boards of directors to listen to investors' perceptions of a company's long-term prospects and opportunities to enhance shareholder value. 100% agree with that. I think that's an entirely legitimate thing. So really all they've done is they've written a letter and they've said, here's our idea. Don't spend so much on the dividend, reinvest into streaming. And then he's shown some of their analysis. And I really like the letter. So then Disney responded and they said, yes, what we're going to do is we're going to restructure. We're going to allocate some more resources to the streaming side. We're going to do some sort of cosmetic stuff internally in a management sense. And then the stock popped 5% after hours. And I was like, my tweet was, Loeb pretends to do activism, Disney pretends to respond, stock price pops 5%. But on thinking about it again, I actually think this is how capitalism and public companies and big investors, this is how it should be done. He doesn't necessarily have to make this letter public, but I'm glad that he did, because as a potential investor in Disney, and I like learning from Dan Loeb, I think it's a good thing. You, as a big investor, you just express your wishes, and management, they said no to the dividend cut because there are lots of good reasons to keep your dividend, but they said yes to we're going to do something with the streaming. So I thought there was a pretty good illustration of the way that maybe that's how business should be done.
I'm curious about, everyone looks at these TAMs and talks about, how great these companies are. But right in front of our face, we have Netflix talking about going into animation, and Disney trying to get into streaming content. So this is like a collision course, right? Like there's guys. Tell me there's not going to be a bloody ocean waiting for all of this stuff, like a couple years out from now.
Here's the
I'll tell
thing.
you that.
Oh.
I'm not sure that that's true. I think your bloody ocean might be filled with Viacom and CBS and all that. I'm not sure there's not a chance for Netflix and Disney to coexist, and that's your next $60 bundle.
The only thing I would say is that, and this is the
Maybe.
criticism that I made of Netflix when I was short last year. The challenge, there's a big difference between being a cable company and having the wire punch through a wall where there's really no competition, and you set the price that the customer will bear. You know, it's the introductory number is $40 a month, then it's $80 a month, and then it's $120 a month. And what are you going to do? You can't get anything else. On the other hand, and so that's the business that the cable companies are in. The movie studios, they stick $1 billion, well, that might be an exaggeration, but like, let's say hundreds of millions of dollars into these big movies. And if they work, then it's a bonanza, and you get, Marvel, or you get, Titanic, or you get something like the big blue aliens on the other planet, whatever that was. Avatar, thanks, yeah.
Yeah.
But, the other option is you spend a whole lot of money in these things and you get Waterworld, or you get something like that. Like, it's a boom bust kind of business, and you got all of your investment is up front. That's a tough business.
Yeah. Disney has less of a problem with that,
Right.
than Netflix does, right? That's why I've always sort of thought that if you like the math behind Netflix, you could love the math behind Disney.
So whose multiple is wrong then?
Well,
Netflix.
I mean, yeah, I don't know. I can understand why people assign the multiple they assign to Netflix. And I also understand why people are offended at the multiple that Netflix carries. But
Dude, have you ever streamed it, bro?
well, I mean, the fact of the matter is, like, I don't know, that they've done much, much better than I thought that they would, and their scale is getting bigger and bigger, and it's not like the capital markets are turning off to them, and they have a shareholder base that wants them to go do this. So I wouldn't be smart enough to run the same strategy, but if you drop me in their shoes, I would do the exact same thing. I'd probably try to spend more. I mean, I don't see why there is no incentive when you're trying to own the rest of eternity, basically, right? Like, they're trying to get a scale advantage on video content. I mean, you laugh, but like, they might actually do this.
But the thing is, if you've got a smart TV, I mean, I think that's an old term, right? That's like space age, when that was 50 years ago. If you've got a smart TV, you can get a tile on that smart TV, and I can produce the content and give you a tile for your TV. Like, no one cares whether you've got. I can switch off any of those tiles at any stage, and I regularly do. If HBO sucks, I'll turn HBO off, and then if something comes on that I want to watch, I'll turn it back on again. So I can just turn a tile on and off anytime that I want.
Yeah, but I mean, who's going to be around at the end of this? I mean,
Anybody.
Netflix
It's
is going
democratized.
full-blown scorched earth.
Anybody.
But so is YouTube.
Yeah, I mean,
without
I
spending the
guess-
money.
Yeah, well, I mean, that's sort of a business model objection.
When has
right?
anyone ever won in a scorched earth scenario?
I mean, I think that when you're chasing global scale, if you win, you win. Like, I mean, that's why you do it. They're playing a different game. They're not. People have won local scale advantage games before. Netflix's local scale advantage game is the globe.
But the way that you
I mean,
win
that's
this game
fucking crazy.
is not by.
But you will.
I don't think the way that you win the game is by signing up the entire world. The way that you win the game is by producing the best content, and that's extremely hard to do. But Disney has a huge advantage there. So Disney has all of these. Like, they're very, very good. We're going to get a tentpole princess, and we're going to own that demographic of little girls who remember that, like Frozen, Elsa. Everybody who's got kids, girls who are of a certain age, that's their princess, and then. There'll be another one that'll come out, and they'll own that. Disney's very good at recycling that content through, merchandise, television. That's the challenge.
I ever get the opportunity to renegotiate with my wife, the one girl that I could leave her for, Kristen Bell is going to be like way high on that list. The fact that she was both Sarah Marshall and can sing like Anna, oh my, that got me hot and bothered.
Is that
She's good.
Forgetting Sarah Marshall? Is that the?
Yeah, dude.
Uh,
Yeah, and she can sing. That was sexy. But I digress. I guess that the way that like
Did you
my
watch
mind.
Good Place? You might like
What?
that one. Check out The Good Place.
Maybe. I don't know if I need more of her in my life. I may need less.
Yeah.
I guess that the thing that I just think Disney has a real shot. I mean, a lot of this is I've talked about this particular letter now for hours and hours with Francisco and my buddy, The Science of Hitting. And I guess that like where I think I've come on this is Disney has a unique opportunity right now to really like push the envelope and to flex customer relationships in a way that no other company has other than maybe Netflix. Netflix, I mean, I happen to agree with you, Toby, when you were like, their inventory ages like food. I mean, I can't even remember the De Niro movie that came out. And honestly, like, I didn't even think that thing was that good. It sucked to watch it on a screen at home. Like, these arguments about going direct to consumer, I think, are insane. Like, the theater experience made Marvel and Star Wars what they are. I don't think if you drop a bunch of movies direct to consumer and collapse the theater window and have everybody watching stuff on shitty ass sound in their house, God forbid your house is tiled, there's no sound. It's just like bouncing all over the place. Frozen sounds like shit. Like, I don't think you can do that.
Wife never lets you turn it up anyway, loud enough to get that little thud in your chest.
Yeah, well, and like your speaker, I don't know. I just think the theater experience is very important to somebody like Disney. So I think that like people that are arguing that Disney should copy Netflix in that way are really missing like a big part of the picture. But I do understand why this is the time to press the advantage. And I thought that I thought Loeb's letter at first was sort of the feedback that I had heard about it. I was like, this is kind of nuts. And then when I read it, I did kind of like it. And I think that the stock reaction today seems pretty rational to me. I mean, if you start doing the math on 200 million subs at, $10 a month or whatever, it gets pretty crazy. And they don't have that, like Disney doesn't have that perpetual machine to feed like Netflix does. Like, I think Disney could get to similar numbers with much better economics than Netflix can end up having. Just as a function of their franchises and back catalog. And that shit is hard to do. Watch the making of Frozen 2 is awesome. Like, that was really good. Forget about Kristen Bell. I mean, don't forget about Kristen Bell, but watch it despite that. She's the bonus.
Mm.
So what's your topic segue onto the?
Oh well,
who does this hurt? So if Netflix and Disney
yeah.
both win, who gets bloodied in this?
Yeah, well, I don't know, but like, so that's I think Comcast is really stuck in the middle here. And as a shareholder, it makes me not thrilled about the choices that I think they may face and how they may respond. I don't really know whether or not that's a fair thing to say. I had tweeted something out like, imagine what Netflix would pay for DreamWorks and Illumination. And I now realize that was pretty stupid, just given like Netflix's culture. And I thought about it a little bit more, and I can understand why DreamWorks may not work in Netflix. I would like for Comcast to call up Apple and offer them DreamWorks or AT&T or something like that. Like, I think that you're going to have a lot of people that are going to try to spend a lot of money, and there's only going to be a couple that can do it. And I don't know. Like, to me, I look at Comcast, and it's interesting because I like the cable business. I think NBCU was a really good acquisition when they made it, but like the future is definitely harder than the last 10 years have been. So then what are you really getting into? Are you getting into a scenario where the free cash from the cable business is used to invest a shit ton of money in Peacock, which I think is sort of a so-so experience as it is. And then they've got a bunch of different strategies where I watch Xfinity on my Roku, but that kind of sucks. But their cable box experience I think is actually kind of awesome, but no one wants to hear about it anymore because you have to rent a box and people are pissed off at that. So I just think that they got a lot of problems. So I don't know. I think some of Comcast content could make a lot of sense with AT&T or AT&T's with Comcast or something like that. And then Apple just has so much money. They'll just spray it everywhere. So I don't know.
That's what you want to hear.
Yeah,
as an Apple shareholder.
Yeah,
Well,
Apple shareholder.
The thing is, Apple shareholders are just going to be like, who cares? Right? I mean, it's if you spend, well, yeah, dude, if you spend, let's say Apple blows $20 billion on content. That's 2/4 of cash flow. It doesn't even fucking matter, man.
Good spot
That's
to be.
crazy, but it's true. The
For what
amount,
end though? What is it? What are they getting with that $20 billion?
that's
Apple
part of
TV
the ecosystem,
stuff?
I guess. Yeah.
The old rule used to be
The
that
Rundle.
when there's when the technology changes, there's this sort of short period where the value accrues to the distributors, like the pipes get the value, but then it always returns to the content creators because the content creators, they're the ones who have the unique offering. I get that they need distribution too, but in this day and age, distribution is the easy part, right? You can, worst case scenario, you Cobra Kai and you stick it up on YouTube. Or if you've got a little bit more kind of infrastructure behind you, you do what that master, is that what they're called? They kind of build their own app. And then basically they just go and interview interesting people and charge you a couple of $100 for a year to learn something maybe while you're watching masterclass. I see there are lots and lots of models out there that mean that it's going to be very easy for someone to get into the game. I mean, I think if you're a content producer now, why would you go? I mean, aside from getting some assuming that you can finance yourself, right? You've got enough finance there. So you're someone like the Harry Potter lady. She owns basically. She's got a franchise that is the scale of any other. That's a Star Wars scale franchise, right? She's a billionaire as a result, but she could turn herself into a mini Disney if she wanted. She could get make little television shows for all of those characters, write another book, create spin-offs. She could do that if she wanted to. She could create her own app where you just sign up for Harry Potter World or whatever she wants to call it. And the challenge isn't distribution anymore. The challenge is having a good idea that lots of people will buy into.
Yeah, I mean, they've got the thing that Harry Potter's got the Wizarding World of Harry Potter at Universal.
Right, she's doing a lot of it.
Yeah, well, and that's I don't know. I guess that's
Kids
why
like that one. Although
I'd
paying
like to,
$12 for a butter beer chap my ass.
What's in a butterbeer?
It's there's no beer, but it's
Butterscotch.
butterscotch. Yeah, butterscotch syrup drink.
Why did you not call it a butterscotch? I feel like you missed out there.
The other reason that I kind of wanted Comcast to sell some assets to Netflix is I think the park business. I think there's a shot that Netflix could actually sort of recreate some of what Disney has
Action
with
figures.
Enough money. Yeah, I mean that's what animation is, from what I can tell, by far the best place to play in content from a business standpoint. And I don't see why, if you're Netflix, why you don't have Disney's playbook of sort of that wheel that feeds itself. And then you have the figurines and then you have all this shit. So it just sort of seems like to me, and I guess Reed doesn't want to have anybody else's culture, and I sort of get that. But the other side of it is you have an engine that's actually currently working, and the amount that Netflix could spend and still justify it's kind of interesting.
Is the engine? Would you say that the engine is currently working?
What, within Comcast?
No, Netflix. Sorry.
Oh, well, I think that they have some economic questions that they could help to solve. And I think that if you had if you could actually acquire a parks business and you could start to bring out.
Do they make money?
What, Comcast Parks business?
Yeah,
yes,
Parks
great
business.
business.
Yeah, okay.
Yeah. So then you get, if you start to get, I mean, it's not a great business now.
They're gonna have us like Stranger Things and
There you go. That's
House
what they
of
should be doing.
Cards, right?
Well, dude, this is what they're investing
Which
in,
one's
right?
scarier?
I mean, it's not about today. It's about 10 years from now. So if you can really spend as much as they're spending on animation, I don't think it's unfathomable that they can make 1 or 2 franchises out of that, and then you invest in parks, and then you start to get the flywheel going. I mean, it takes a while, but we all claim to be long-term oriented. If I was long-term oriented for Netflix, that's 100% where I'd drive that company. Now, maybe they won't. Maybe they just want to be a media company, but that's not as good of a business, in my opinion.
Let me ask you this: do you think there's any fatigue to franchises in general? Just like, I'm just tired of superhero movies. I'm a little tired of
No,
like
bro,
them,
they fucking crush when they drop. People go to the theaters like crack fiends.
Yeah, I'm with you there.
Yeah.
Like, look at
I don't know,
Endgame.
man.
I can't watch another
may
Star
not like
Wars.
it, but
I
like
can't
many
watch another
people
superhero.
do.
Well, let me ask you this: like, how many more are there that we could plug in? Like, is there room for 10 more Star Wars level franchises to go around, or is that like sort of like, well, that was sort of a window of nostalgia based, in the. I don't know, man. I'm not sure there's enough. I'm not sure that pie is that big on the franchise slots.
Well, I mean, I don't know that you have to be that sure. Let's see. Top grossing Lifetime movies: Star Wars Episode 7, The Force Awakens. That's 2015. Avengers Endgame 2019. Avatar is 3. Black Panther was number 4. Avengers Infinity War is number 5. I mean, so what? 3 of the top 5 are Avengers and
Call
came
of
out
Duty,
in the last 2 years.
More money than all of those combined, the last drop, right? Like, maybe they're missing the real obvious thing, which is the video games.
Well, I don't know that Disney's a video game company, but you asked a movie franchise issue, and what I'm telling you is 3 of the top 5 grossing films of all time belong to Avengers and came out in the last, really 2 years that theaters were open. So it's hard for me to say that there's consumer fatigue.
It's
data, bro.
I think
data.
Fair enough.
I think it's funny how few watchable movies there are. Like, I used to, maybe it's because there's been a huge investment in TV. Like, everybody's worked out that you don't want to get, don't spend $200 million making a movie that people are going to watch once. If you're going to spend the $200 million, make a season of something and give people 10 or 13 chances to watch something and get into it and have their friends talk about it and tell you about it. And then, you've proved over the course of a season that there's demand for it. And now you've got something very valuable because you can Game of Thrones it. Now we can, every week we're going to bring out, like, the thing that everybody wants to watch this week is the final episode of Game of Thrones, or the episode, whatever it happens to be.
Yeah, I don't know. It's interesting how Game of Thrones didn't drop the whole season at once, and that benefited it.
That's
think
an
quite
HBO
a bit,
thing, right?
Yeah, and I also think that HBO could have pivoted, I guess, in theory, but probably not. But it was nice to have an event, and watch the end of this season together. Part of the things that sucks about streaming is like it drops and it's already gone before I even find out about it.
Yeah.
Can't have any like water cooler talk. It's like, oh no, I didn't watch that. That shit's like I got into Cobra Kai and people are like, yeah, dude, 2 years too late, loser.
Yeah, well, I got into it
this
this week.
I fucking like it. Shut up.
I found it this week, so that's how far
That's right. Yeah,
Hey,
I didn't
late
know.
adopter.
I'm a very late adopter of the TV. Yeah.
How's that Pixel phone working out for you?
It's a different matter. It's just my little kids and other things going on. So if you,
it'll be interesting to see too. Discovery just partnered with Curate, my beloved. Hi, Barry Schwartz. You're welcome for the mention of Curate again. And they want to do Food Network with QVC. That's kind of interesting. I don't know if it's possible to scale up these legacy companies and then release this version of Zaslav's skinny bundle that he always wants to see. But man, my wife, she is addicted to Bravo. She is like a fiend. So the idea that there's not something there.
My condolences.
I actually kind of like it. You ever watch Below Deck? It's not that bad.
No, I haven't seen that one.
Oh, it's not bad. I mean, I'm not gonna sit here and go tell people like, oh yeah, Below Deck's the best thing ever, but I'll watch that shit for sure. MTV The Challenge, you'll find me watching that, putting up with the commercials. But I'm digressing. So anyway, like I don't know if there's like a some package of content that makes sense for those people, and I don't know how you distribute it. Like, I don't know. These are hard questions. I don't know where the world's going.
Throw your questions in, folks.
But that's what makes me nervous about Comcast, right? Because like they used to be the distributor. What are they going to do? They're going to invest in Peacock, some shitty ass technology, if you ask me.
Don't you just need the content?
I don't know. I mean, I legitimately, I know this like really makes people mad on Twitter when I say this, but like I use Roku. I don't think Roku's that good of a product. Like, I mean, fine if you want to buy a cheap TV and you want that software, like I get it. It's fine. But I actually think the Xfinity product is quite good. They just, to your point, I don't know how you need a distribution mechanism and then you need the content to distribute, right? So how do they have that and how do the economics work? That's the hard question.
You're going to get Peacock blocked now.
But what's the Roku? I've seen it talked about a lot. I know that it's like it's a streaming, but it's a streaming thing, right? It's a TV.
Well, it's like TV, but for hobos.
No, it's the software that basically they partnered with. It was like TCL and maybe Hisense and one other company, and their distribution sort of strategy was to lead with hardware. So if you look at like their financials, you'll see that the hardware gross margins are super tight. And in the beginning, people were like, "Oh, this is a shit business." But what people didn't see is they were just leading. It was like a razor blade model, right? So then they got their software into enough homes that at least in the U.S., I think this is globally, but they're involved in like the standard settings. So if Netflix wants to come out with an app like redesign, I'm pretty sure Roku is in the discussion. Maybe not against Netflix, but I think that they're like some of the hurdle that you have to get through is that Roku says, yes, this looks good. And then they got, a bunch of advertising. And you own a big screen.
Are they competing with Apple TV? And I've got a Google TV, and there's a Amazon Prime.
Yeah, everybody's
Amazon
trying
Fire.
to sell you something and take a rake off it, right? So Roku's theory is we get in enough homes, and then you sign up for Disney Plus, and then we get our commission on Disney Plus, and then
that's a tough business.
Game.
Like the Apple TV is pretty cheap, but then the Google version's like $30. And the Amazon Fire is like $30. Like that's what you're competing with.
Apple TV sucks.
Yeah, but there's other
and everyone that's
options.
like, "Oh, check out Apple TV." I'm never going to. I have not seen for 7 years. I've been waiting for Apple TV to get good, and it's never happened.
What do you mean get good?
And they're not going to get me back in with Jennifer Aniston.
Content? Or?
No, man. No, I had like one of the very first boxes, like the Apple TV box. And like, it's just, it just kind of sucks to use. Like, I don't really care for the remote and the interfaces.
There's a Google version of it. There's an Amazon version of it.
Yeah.
And those things
Google
are like...
and Roku are sort of like the smart... Google, I guess, has the rest of the world. And then Roku has a pretty strong position in the US, is my understanding.
I have the Google one. Like I have a little fob that I can take with me when I travel, and it's got all my stuff on it. And it already talks to my phone and my computer, and it just means I don't have to think when I go anywhere else. Like
that's what they'd like.
But it's just so, I mean, we've got Apple TVs.
All of Daddy's special videos.
there's nothing special on that.
Oh, okay.
It just seems to me like that's you need that little bit of hardware. I get that. But then once you're in that hardware, so I can access from the Apple TV, I can access Amazon. From the Google TV, I can access Amazon. Like Amazon's kind of like, well, you can go through our hardware, you can go through our it's my phone talking to me. You can go through the Tile, and we don't care. Like if you go through the Tile, you buy our, I've got a Prime membership anyway, so I think that's a tough business to be competing in. Gee.
Yeah, I think they were smart to hook up with TV manufacturers. That was a intelligent decision to get in the home.
Google's done the same thing.
Yeah, that's right. That's why I think Amazon should do the same thing. I don't know what Amazon's messing around with this Fire Stick. It seems like a real waste of time.
But they've got the Tile. Like, you can get the Tile through Apple TV. Apple TV is probably the dominant part of the market, right?
I don't
Whatever
think
those
that
things-
Apple TV is, but yeah, I mean, you could in theory. It's more layers, right? If you're Amazon, don't you want to be the initial landing layer? I'd wanna partner with the TV manufacturers and then be the layer of software that other things ride on. I wouldn't want to ride on somebody else's software.
And then sell it through Amazon for cheap.
Yeah.
It's easy. They're going to win that, right? The big issue there is antitrust.
Well, I mean, you would
What's
say
that?
that they were going to win it, but Roku continues to execute. So I don't think that they can just win it. But it's interesting.
Both parties are making antitrust noises at the moment. Nobody's doing anything, but I don't know what you would do, but it does seem like something is coming. That's the greatest buying opportunity for all those things ever when it finally gets here.
Toby.
I don't know. I actually think most people have already priced that in, probably. I'm not sure it would sell off. People have been having this discussion for so long. Everybody that I know is like, you got to buy the shit out of them once it regulate. It's just going to strangle
No
competition.
competitors then.
Yeah.
All right, here's a question. How do you think about the ethics of a company before making an investment? Do you avoid companies that go too far, like rumors of child labor, or do you just look at fundamentals?
I don't know. I'd buy Nike now. I would have bought them in the 90s if I was smart enough. So they built something on the back of child labor, allegedly, and that didn't matter to me very much. I'm not trying to go out and
Yeah,
act
Bill's
it.
pro child labor.
No, I wouldn't like. I'm not gonna sit there and I don't know.
JT?
I would advise if in the short term you can get away with that kind of thing, but in the long term, eventually you have to have every interface that a company has to have a good relationship. Otherwise, there'll be defections that can sacrifice the company.
Dude, that was 20 years ago, and Nike is crushing it. They basically moved all their labor over to China.
Did they stop doing that?
And they stopped exploiting children, but it's not like they have like fair labor practices. They're made in China. Like they've abused people for decades, and no one gives a shit.
So's Apple
I don't
by
know
that
if-
measure.
I don't know if I
Yeah,
would
that's right. So I don't know. Where do you draw this line? On one hand, are they abusing people or are they giving people opportunity? I don't know. These issues get so murky that I just decide I'm not going to deal with them.
That's fair. I don't take umbrage with that either. I think that those jobs may be better than what the alternative was for that person. But
Yeah, I mean, the other side of it is there's suicide nets under the windows, so they're probably not great jobs. But maybe that's the best alternative. I don't know. So I don't know where you start drawing the line, in my opinion. I think it's very, very hard.
I think the specific example aside, which is you can have legitimate moral arguments on both sides of that, and resolve that to your own satisfaction. But I have a quantitative approach that doesn't consider things like that. However, if I was running a discretionary portfolio, I'd be on the lookout for any single thing that could poke a hole in anything that I held, because I'd want to hold it for basically forever. And so anything like that, like any ethical missteps or anything that I was a little bit nervous about, if I saw them doing it, then that would be a big issue for me, is the answer for me.
I mean, I just bought cigarette companies, so I don't think I can sit here and say I care too much.
That's not, no one's holding a gun to their head and telling them to smoke them these days. Like, everybody knows, right? It doesn't necessarily mean that I would buy them either, but I'm just saying it is what
At
it
this
is.
point, that's sort of where I'm at, and I've bitched at my mom to quit smoking her whole life, and she hasn't. So if I'm going to lose my mom to cancer, I might as well make some money on the cigarette companies.
That's fair. It's a closed system. Do you have a focus on dividends or growth potential when composing portfolio?
Not
is
really.
the question, do I want my money now or management to hang on to it? Is that the question?
I guess the question is I asked it.
Well, I mean, obviously, if it's depends on the management, I guess. I mean,
Yeah.
I would challenge, if you are big into dividends and you think about Berkshire, and would you have wanted that dollar back to figure out what to do with it, or would you rather have Warren kept it and compounded book value at 20%? I mean, to me, I'm pretty happy to let him keep working with that dollar. So it depends on the management, though.
Yeah, that's a good answer. I agree with that. I was going to say I have a slight preference for yield, not necessarily dividends. I just like to see the
Either
money.
way, I mean, whatever return of capital.
I mean, the fact is most companies can't reinvest all of the most good companies can't reinvest all of the capital that they generate. And so they need to be paying it out or opportunistically buying back stock, making smart acquisitions, doing things like that. I have a bias towards a little bit of that rather than reinvesting it, because I think that most management teams aren't up to reinvesting it, but then that might just be focused more on the management teams who can. And certainly Buffett's one of those guys. He's in the discussion. We're thinking about bringing him onto the team, maybe starting 5 next season. See how he goes.
The thing about dividends is cash flow is what actually makes you rich, or wealthy, I should say. Right? Rich is a number. Cash flow is passive income exceeding your expenses. So, I haven't seen too many people pay bills with buybacks. Now, you could sell proportionately into one, and that makes sense to me. But
that was the most out of 2020 comment I've heard all year. You don't get rich with cash flow.
Well, that's what Greenblatt said on the Ritholtz podcast, right?
What?
That if you took all of the companies last year that had like $1 billion market caps or greater, I think it was market caps, that had lost money, and you invest in those, you're up like 65% this year or something like that, and you outperformed, obviously, if you're up that much.
Yeah, man. It's the golden age of selling dreams.
Comment here from Value Stock Geek: fading ESG will be a solid source of returns for the next decade. I just put that up because I wanted to make a comment about that. The problem that I see with ESG, aside from the fact that the same argument that everybody always makes, that everybody's got their own definition of it, I think there are kind of objectively there are some problems with our definitions of ESG, and there are things that we can all agree on, and probably we could produce a good ESG product, but nobody who's sensible and agrees on all those things is going to invest in it, unfortunately. You need to be appealing to the fringes, and so that they're always going to be loopy, these ESG funds.
Well, and look, when I said what I said about Nike, I'm not trying to go invest in companies with the hope that they're going to go exploit children. That's not my statement. But if I was a Nike, I mean, honestly,
that's how you screen for it.
Yeah. Well, that's what I'm saying, because I'm sure somebody's going to get all mad. But
how about Rick?
On the other hand, if I held Nike and that came out, I don't think I'd sell it. I mean, and that's just honest. And I'm sorry if that pisses somebody off, but that's the truth. I mean, I'm betting on the brand, not whether or not they're going to exploit child labor in perpetuity. So I just don't. I don't think I'd sell based on that. If Apple was exploiting children, I don't think most Apple shareholders would sell. I think they'd be like, "Oh, buy back into the share fall, the share selling off. Just make sure that I get more buybacks."
What about the ESG kind of argument that's similar to the indexing one, where it's just the flow of funds is going to be enough to kill you for the next 10 years if you were to try to fade it?
Well, I mean, I have the same argument with the other argument, the other flow argument. Doesn't that just leave you with all of these good? I don't care about multiple re-rating. I just want something that has a reasonable yield and reasonable growth. And if I buy it at that level and I keep on getting those things, I don't care if the multiple doesn't re-rate. That's the thing that these arguments seem to miss. I don't care if the multiple doesn't re-rate. If these things get cheap enough that I can buy, I'll go and take them over. I'll go and take them out myself. I will be the agent, and I will make money doing that. That's why the arguments are so silly. I didn't mean to direct that at you. Sorry.
Wasn't it me?
I
do know who it was.
Yeah.
No, well, and it's the other thing is, if say that there are no flows into Altria, right? I mean, Altria fundamentally
you get a 10%
is
dividend.
selling. Yeah, well, and it's selling one of the most addictive products in the world that's ever been invented, and it's one of the best businesses ever. So if you want to pound that down to 5 times earnings, they're going to buy the shit out of their shares, and the cash flow is going to be there. So if you have a long time horizon and you actually don't care about underperforming, that's really okay. I mean, it's sort of in a weird way presents the opportunity that everybody else is afraid of. So like, fine, puke it. I'll take it.
If you're a fundamental guy, it's the best thing that could possibly happen to you.
As long as you have a capital allocator that will return it.
As long as you can survive.
And has the cash flow, yeah. That's right.
What do you think about concentrated portfolios? Pabrai only holds 2 stocks at the moment?
No, he's got a bunch of Indian ones.
Is that so?
He only has to disclose the U.S. ones.
Okay.
Don't we answer this like every other week? I feel like
Pabrai specific.
This is what I think.
Just concentration in general.
Yeah, the guys that you read about and worship are going to have concentrated portfolios, and they are littered with people that tried and didn't. Now they're like poor, and their wife hates them.
That's right.
So how much do you care about survivorship bias?
There's
when
a big
you worship
survivorship
something?
bias. That's right.
Yeah.
You can make the argument though, it's perfectly rational for them though to do that, right? Because you either hit a home run or strike out and go find another job, right? So inherently, you have to kind of expect if you're trusting a manager, that their incentives are to go big or go home.
Yeah, I'm sort of
unless they've got their own money really right next to yours, which is kind of the only semi anecdote to that.
That's one of the interesting, the concentrated investing book. We looked at guys who had 25-year track records of outperformance, and I think the thing that really stood out to me was that the nature of the businesses that they bought, like that more Buffett style. We're not going to buy anything that's got any catastrophe risk in it whatsoever, because if you're going to be concentrated and you've got 10 or 15 or 20% of your portfolio into something, and that blows up, then you lose a limb if that happens, and you might be out of business.
You want to be in like really safe stuff like hotels, airlines. Real steady cash flows, restaurants.
I was thinking about this the other day with a lot of these SaaS multiples. I mean, I really do understand why people are doing it. I just think the hard thing for me to then get to is if you're buying those companies because of some of the inherent safety and growth in the stocks, if you end up underperforming because you didn't do good valuation work, and the valuation already has blown past. Like a couple of people are like, "Oh, we're only in the 3rd inning." It's like, yeah, but the fucking stock is priced like
it's all
like
over.
They won the championship.
Like that's not really the question here,
Raising
unless
the
I just don't
banner.
understand the game, which I may not, right? But like there used to be 2 parts of this game that mattered. So
they still matter.
Yeah, maybe, I don't know. But, what I do know is if in 7 years they haven't really gone anywhere, but the business has grown into the valuation, I think you still own a good business. And maybe if you have a 30-year time horizon and you're
Which
right.
They all do. That's the time horizon they're thinking.
Right. I'm just saying, I guess what I'm saying is I understand the behavior. I think that the behavior has been taken way too far. And I think that it has been too rewarded. I think if I was one of them listening to this, I'd be like, you don't know what the hell you're talking about. You missed out on all that. Some of that's a fair criticism. Like I don't disagree. But I also don't think that like the comments that I'm making don't have merit because I missed out on some of, like, I admit I maybe don't understand what Twilio can be. If you think I'm not at least curious enough to understand what that company does, then like, I don't think you've listened to the podcast, and what I'm telling you is I'm curious enough to know what it does, and I don't have a clue how you get that build up on it here. But I would have said the same thing before.
Well, that's it's first order thinking that we say this company will be bigger in 5 years. Okay,
It's gotta be huge.
I believe you. Like, I think that's a very reasonable assumption. However, I'm not sure that the security price will be bigger 5 years from now.
The business will be bigger. The company might be the same size or smaller.
Yeah, and I think that the error that I used to make before I really thought deeply is, your terminal cap rate's going to be quite a bit lower, right? So your terminal multiple is going to be quite a bit higher in these companies than it will be in other companies. I mean, they are going to trade at steep multiples in perpetuity, but
I'll take the under on that.
Perpetuity's a
There'll
long
be a
time.
day when this stuff is
software in general,
super
that's going to
cheap.
trade at a big multiple. No fucking way, man.
I don't know why.
Those things,
Why?
Why? Because they're incredible businesses.
They are, but there's if they get like if it's that easy to start and disrupt, why won't they be competed? Like, why won't the competition come in and compete for some of that?
I think that's a fair question about TAM and duration and all that stuff, which is why I have not been comfortable playing that game.
Snowflake has a $62 billion TAM and it has a $65 billion market capitalization. I think that's amazing.
Yeah, but that can't be the TAM like 5 years out. That might be today's.
Well, the market capitalization's today's.
Yeah, I know. I mean, I get it.
That's real.
I get it.
The margins are negative 52%, but the Credit Suisse report said that by 2042 margins will be 48%, and they will have grown revs from, I think they're like 558 million. Then they grow them 90 times. Good luck, everybody holding that.
And it's
from here.
still overpriced from
2042.
there. That's to get to break even.
It's currently trading on 80 times 2021 expected price to revenue.
Sale.
2021's a little early. 2023, I think you got to think. I mean, I first of all, I agree with what you're saying and the sentiment you're laying down and how you're saying it. I also do think that if you're looking at this year's sales multiple, you're doing it a little wrong. But
I'm looking at 2021's.
no, I know, but I think you really got to look at like 2023. I mean, if you're really going to play that game with these
Okay.
hypergrowth
It's probably
things
like on
off small
30
bases-
times.
What?
It's going to be
What's the right multiple then, though?
I don't fucking know. I mean, if I knew this stuff, I'd play in that world. But what I'm saying is I used to say that I definitively knew that it was crazy. I do not know that, and I have been wrong in the past. I also do believe that the price you pay matters, and in my opinion, the reason that I was comfortable laying the bet Zoom, and I still think that I have a reasonable shot at winning that bet, is I was betting on an $80 billion base compounding, and $80
That's
billion
right.
used to be a lot of money. Maybe
right.
it no longer is. But as far as
What's the
I'm
update
concerned,
on that? Where are you at
oh,
for
I
that
don't know.
one?
I haven't looked, but
We're running out of time here, fellas, but
yeah.
if you can.
but you know,
Give us
big,
an update later.
big bases compounding for a long time
I
is by
like
definition
big
difficult.
Bases and I cannot lie. All right,
There you
guys.
go.
Thanks very much, fellas. We'll be around next week. See you then.
Have a good
Cheers,
one.
everyone.